Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, February the 25th, the year 2022. Let's talk trading. It's time for the weekly wrap-up. As always, these videos are for educational purposes only. Your results may differ from mine. Looking at the month, you can see the price is 57 pips below the monthly open. 258 off the high and 112 off the monthly low. We bounced yesterday. For the week, very interesting week. All the gaps filled. We're 200 pips below the weekly open, 255 off the weekly high, and 111 off the weekly low. Quite a lot of movement on the pound. And today, very interesting. You can see yesterday we dropped out of the opening range for the week. Yesterday, we dropped through the opening range for the year and for the month. And today, we actually got back up inside the opening range for the month and the year, but now we've pulled it down below it. But we still have one more day, Monday, the last trading day of February. For the year, 143 pips below the yearly open. And 110 off the low and 366 off the high. We actually broke out of that monthly inside bar from 4 months ago yesterday down at 34.33. You see we went back up and got barely inside it and fell back below. And there's a lot of inside bar action on the week. Today, only 72 pip range, even though we've got, let's see, 2, 4, 6, 8, 9. Actually, 2, 4, 6, 8, 10, 11 pairs over 100 pips range today. Buy zone provided some long trades today, no short triggers. So we had 1, 2, 3 opportunities. Maybe a fourth is coming up. And looking here at the rat zone, you can see the red rats feasted and the green rats feasted a couple of times. Red rats got another opportunity, and it might be the green rats' turn right now. Okay, price near the pivot. They called for a short. First time it didn't work. Second time, third time. Here it worked. There's a couple times there it didn't. And then here once again, calling for a short. And we did take out the pivot. Yesterday's pivot is missed. So now we have a missed pivot for February and a missed pivot for January, both above. As far as the week, we took out that pivot. And the month, we've taken out that pivot. Wick zone, in and out a couple of times. 1, 2, 3 times. We might head back into it again. That's the daily lower wick zone. Now, the ranges. If you remember, at the end of last week, beginning of this week, I showed that there was a couple of small weekly ranges, and before there was a that were when I say small, less than 200. The 2 prior weeks before was over 200. Well, we kind of made up for it this week with 366 pips. We didn't break out at a high, but oh yeah, we broke out at a low by 214 pips. And the high minus the close at the present time is 256. Close minus low, 111. I'm sorry, 110. The average was 111. And looking on the other side here, On the weekly, high minus open, 112, open minus low, 312. So I'm sorry, not 112, 54. I keep looking at the wrong things here. So 54 high minus open, 312, 312 open minus low. So there were pips to be had trading the buy zone and pips to be had trading the rat zone. The wall mall method was once again proved to pay off. Past 3 or 4 trading hours, you can see here there was a short trigger, a long trigger, a long and a short trigger, and another short trigger here. And you can see the ranges were nice. So once again, just trading something simple can be profitable. Looking at the higher low, lower high chart here, you can see we had a lower high right here, rocketed through. We had a higher low, price came back. So off of a 3 ball, off of another 3 ball. And looking at a price travel analyzer here, using that Bambino Flex idea for the week, it was going up, but usually he looks at the day. The day was said, let's go short, but that didn't happen. S1 was way down here, and we never broke out of the previous day's low to even attempt to get to S1. So after that huge day yesterday, there wasn't much to be had. In fact, yesterday's range was, okay, where'd that chart go? Here we go. Yesterday's range was 276, which, if you look here, was more than the past 4 weeks range in one day. So that was definitely an anomaly. But I guess we had one day bigger out of the last 12. That's at the 91 percentile. That doesn't seem quite right. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I don't think this range was bigger. So this must have been the biggest. So I guess it would be at the 91 percentile. That would be the biggest. And for the month, we've been talking about price. There was something I wanted you traders to consider. Let's see. Let's see. I guess I can do it on this chart. I just want to take away these indicators. And let me hit F8. Let me put the grid back up. Whoops, I don't think I did that right. F8, grid here. Okay. For some strange reason, I don't see, oh, chart shift, yes. I don't see my, oh, there it is. Pull that all the way over. And let's put this at the 1 minute time frame. And one other thing I want to put up here, show period separators. Okay, so you can see where the day started. But if you kind of just look at the chart, and in fact, let me change one more thing on the chart. Let's go to just a bar chart. And I think might have to change bar up or down. And just look at the chart. So that was the beginning of the day. And if you just look at the chart and you want to trade, I mean, without any indicators, you can see where it topped out. You can see where it bottomed out. You can see where there was some congestion, accumulation, markup, distribution, markdown, accumulation, markup, some distribution, markdown, markup. So if you just look at this blank chart, maybe this is the chart you should start the day out looking at. So when you sat down at your terminal, maybe it just been to this point of the day. So if that's where price was, then would you trade or would you wait? Because if you waited and then price got down here into this range right in this area, you could see, well, it moved up. So you'd wait. And then here, once the price shot out here, came back down, then it moved up again. But you can see right about here, that would have been a nice place to put a short. And it kind of told you this from here. So right here, it made a high, failed to make a high, and then came down here, made a low, then started going up. And then you can see right here once again. And just by looking at, a 1 minute chart like this, you can really just see what price has been doing rather than have all those indicators on your chart. And this way, maybe you get to trade what you see as opposed to what the indicators are telling you, and you get your bias. So you can see here, price came down to this level, and what's happened from this level more times than not? Well, it seems like price went up, or there was accumulation. From this level right here, it just seems like there were buyers accumulating. And same right here, all from this level. So, if you have that price line going all the way over and then you do a look left, then you can just read the chart and you can place your trade accordingly. So let's just say you went long somewhere here, then well, your stop might be here, so you can set your position size accordingly. So, fellow traders, that's it for the week. I hope you had a profitable week. Yesterday was definitely an interesting day. That's for sure. A huge daily range. And I hope you have a fun and safe weekend. I didn't see any questions lately, so feel free to ask if you have anything you want cleared up. So that's the weekly wrap up. And when you come back next week for that last trading day of the month, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.